Assalamu alaikum wa rahmatullahi wa barakatuh. My name is Ahmed Abdullahi Muhammad and my matric number is 260537. I'm one of the members of Group 6, and in this video we discuss about the difference between Takaful and conventional insurance. First, conventional insurance is a kind of financial protection that involves the insured and insured and insurance contracts. In exchange for his money, the first person promises to pay back the second person if certain things happen. It's the transfer of risk by an individual organization known as the insurer to the insurance company, whereas the conventional insurance is a tool to reduce uncertainty because losses are shared or spread out among exposure units. There is less uncertainty. Conventional insurance is based on interest, whether life or general insurance. The insurance business invests its money or conventional instruments to earn interest. Policyholders pay fees for late premium. Features of insurance consists of four. First is sharing loss, transfer of risk, payment of unplanned loss. The last one is benefit of loss. Functions of insurance consists of primary function and secondary function. But the primary function is the responsible distribution for the financial losses of few among the money insured. For the secondary function, insurer is defined the responsible transfer for risk of loss from one unit to another. In exchange for payment, insurance may be described as the social device to reduce or eliminate risk or loss of life and property. For the Sharia resolution of insurance, why Sharia is not accepted by the conventional insurance? Because it consists of riba, qarar, and maisir. Takaful insurance. The term of takaful comes from Arabic word BIFS kafalah. Its simple means to guarantee together. Takaful is a system in which participants make monthly contribution to a mutual fund with the intention of collectively securing each other. The Islamic Financial Services Act of 2013 states that Takaful is an arrangement based on mutual assistance in which Takaful participants agree to contribute to a common fund that pays mutual financial benefits to Takaful participants or their recipients. The concept of Takaful is to maintain the people understandably once they required assistance or any difficulty. It provides the idea that everyone is concerned about the other person's well-being. In the Quran, Allah states that humans should assist each other when they are in risk or in need of assistance. There are several passages in the Quran. Allah encourages us to support one another. For the benefits of Takaful, Takaful contracts call for mutual assistance among member insurance companies. Takaful fund management to avoid the forbidden elements of riba, qarar, and maisir. At Takaful, the company pays the zakat, and the new Takaful fund will usually be distributed back to the participants of Takaful insurance. For the operational model, the Mudarabah and Wakala are the two main kinds of Takaful models used by Takaful operators. Manage and invest money. Some Takaful operators use other business models such as Waqf and Tabarruk, and arrangement of models to a lesser degree.
Assalamualaikum warahmatullahi wabarakatuh. My name is Azatul Akmal binti Shamsuddin, and I will continue the discussion on the different of conventional insurance and Takaful. Okay, first, for the intention of the contract, the insurance objective is to build legal relationship on the contract only. While the Takaful, the objective is to build relationship that contain legal and spiritual relation that connect to the hereafter. Next, the type of contract in insurance is based on the exchange contract, or known as a purchase and sale contract between the policyholder and insurance provider. While the Takaful is based on the cooperative fund or donation, that also called as a Tabarruk contract between the insured person and Takaful agency. Next, for the subject matter, in insurance, the subject matter is according to government law, and the transaction might contain the unlawful factors such as riba, gharar and maisir. While the takaful is according to the Islamic law, and the transaction must be free from the unlawful factor that being prohibited in Islam. Next, for the guarantee in insurance, the guarantee is by the insurance company regulation, while in takaful is guaranteed with the joint guarantee made by all the takaful participant, because they mutually guarantee each other against any loss that they encounter. Next, for the fund ownership, in insurance, the fund ownership is owned by the company from division of asset and retained by the policyholder and stockholder. While in takaful, the fund is owned by the takaful participant, but it's handled by the takaful operator that act as a trustee and lend assistance to them. For the investment, for insurance, the fund from the insurance might be invested into any kind of stock, and the stock might involve non-Sharia compliant stock. While in takaful, the fund will always be invested into Sharia compliant stock, and also the stock need to meet the law and regulation. Even though they are not much different from insurance and takaful, but in here I will explain to you more about the general and family takaful. Okay, first, for the general takaful, you know that the coverage is on property, right? So general takaful mostly in a short-term contract that cover for 1 year or less than that. There are many types of general takaful that you need to know, which is motor takaful, fire takaful, marine takaful, and miscellaneous takaful. Okay, first for the motor takaful, it's cover for own damage such as if the car breaking down, caught in fire or theft. Then it also act as a legal liability to the third party, which cover for death or injury on body to any person. It also cover the person who get in accident, especially that result in death or the person become permanent disabled. Next, it's cover for the third party, which takaful that purchases to protect against the claim of another person, and it also cover for this third party, but added with the protection to the insured vehicle in case there is accident, fire, explosion, theft and others. The type of vehicle that being covered are private car, which your own car that you use for any kind of purpose, like casual, go to work and others. Next is the commercial vehicle, which the vehicle that used to transport good passenger, like bus, taxi and transportation lorry. Okay, next, for the basic fire takaful, it's a takaful that cover for loss or damage to the buildings that damage being covered, like in case the building caught in fire, explosion, theft, flood and earthquake. And another one is fire takaful that cover for home, which there are two types, which is one for the house owner, which cover home for loss or damage, and the other one is cover for householder, which cover for the damage to the residential property. Next, the marine takaful. Marine takaful is a takaful that cover for loss or damage on a cargo and ships that transport property from one destination to the final destination. And then lastly, is the miscellaneous takaful, which is the takaful that cover any type of risk or damage to the travelling items, like in case the item become a misfortune or destruction to the participant properties. This takaful also cover for burglary or theft with violence, like breaking or destroying the insurer property. And it also cover for the money that being lost during transaction on a business. Okay, that is for the general takaful. Okay, next we go to the family takaful. Family takaful, or known as a life takaful, is quite different from the general takaful, which is family takaful cover for anything that related to the life and provide long-term saving for you and your family. Okay, the family takaful is in the long-term base contract, and the amount of a contribution they are different, which depend on how much of coverage you wanted to be covered. Okay, the risk that covered by the family takaful is on the premature death, which means that the death of a family head, like fathers, and if they left behind debt or financial obligation such as a house loan, child education fee and others. Next, the risk that cover also on the total permanent disability, or known as a TPD, which a coverage for the insurer that become disabled or unable to work due to injury that caused by the accident or illness. Then family takaful also cover for the old age, which is when their age is more than 50 years old, and this is the most important coverage in the family takaful, which is the coverage for medical and health with critical illness in case the insurer getting sick and need a medical treatment. Okay, next, the type of the takaful under the family takaful are, first one is hibah. Hibah, which means the takaful that act as a gift, which in takaful context means giving any amount of money to someone, especially their beneficiary, in case the insurer died. Okay, next, the coverage for the medical and health, or known as a medical card, which mostly cover for cost of hospitalization, medical costs, and it also act as a compensation to the insurer in case they are diagnosed with critical illness. Okay, next, for the education takaful, which provide for saving and for your child future education plan. And lastly, the investment linked takaful, which a combination of investment and takaful coverage, where half of the contribution that you give will be invested in the Sharia investment fund and get the return back. Okay, this is for the different between general takaful and family takaful.
Assalamualaikum. My name is Nur Anika Nabiha binti Marul Hairi, and my matric number is 280302. I will continue about conflict between conventional insurance and the principles of Sharia. Islam does not forbid trade, nor does it prohibit contract just for its benefit. What we want to ensure is fairness and fair play in all matters to all parties. Only element that can lead to the exploitation of persons or those deemed unfair according to Sharia standards will be prohibited. What is fundamentally useful to society will not be contrary to Sharia. The objection is not against the concept of insurance, but against the existence of weaknesses in the insurance contract, namely gharar, which is uncertainty, maisir, which is gambling, and riba, which is usury. Commercial insurance and all its contracts are relatively new developments. The pioneer Muslim did not know this and had never considered it by previous Islamic faith. The attitude towards illegal insurance from an Islamic point of view continued for a full century after Ibn Ibn. However, given the immense importance assumed by insurance for modern finance, trade and industry, insurance contracts have been the subject of extensive and in-depth study and discussion among Islamic fiqhs over the past few decades. The first International Conference of Islamic Economics was held in 1396 Hijri, which is in year 1976 in Mecca, which was attended by over 200 fiqhis and Islamic economists. They reached the conclusion that the commercial insurance practiced by commercial insurance company in this area did not comply with the Sharia principle of cooperation and unity, as it did not meet the Sharia requirements that would make it valid and acceptable. The conference also recommended that a committee comprising Sharia experts and Islamic economists should be set up to propose an insurance system that is independent of riba, maisir and gharar. The matter continues to get the attention of various Islamic fiqh groups with the cooperation of leading and distinguished economists and insurance experts who have produced differing conclusions, views and opinions. Some of them approve all forms of insurance subject to certain conditions, limits and qualifications, but others do not agree at all. However, the majority of Islamic fiqhis are now of the opinion that modern Western-oriented insurance contracts are not in their current form that complies with Islamic Sharia due to the existence of the weaknesses mentioned earlier. The conference expressed the opinion that key law relating to insurance and most of the insurance business are in conflict with Islamic injunction. Here are some of the reasons why conventional insurance is prohibited. First is because this contract contains gharar. The existence of gharar may deprive the contracting parties of equal negotiating power, resulting in an inability to make informed decisions due to a lack of understanding of the contract's nature of ramification. Gharar is forbidden under Islamic law for this reason. It's also frequently linked to the presence of gharar. Generally, the maisir element in conventional insurance is associated with the act of buying a policy in the hope of getting more in terms of compensation or indemnity if there is a danger. This is a game of chance and is prohibited in Islamic law because of the uncertainty involved. Next, there is a riba, which is usury element in this contract. Conventional insurance is also said to be tainted with the element of usury. This happens usually through premium payment investment in riba-based financial instruments such as interest-bearing accounts. Lastly, such an arrangement comes in the definition of akli mal batil, which is unlawful acquisition. Similarly, the Islamic Ideological Council of Pakistan ruled in December 1983 that the well-known and current form of insurance was contrary to Islamic order. Insurance contracts in all their forms are illegal, corrupt, false, prohibited and undeclared. The Malaysian Special Task Force elaborates on the issue of gharar by elaborating on the principles of the contract according to Sharia, the three basic elements which is pillars of the contract, which are akid, which is the parties to the contract, ma'qud alaih, which is contract matters, exchange of property, services or payments, and sirah, which is offer and acceptance. One of the most important elements related to an insurance contract is the pillars of ma'qud alaih. In insurance, the exchange of ma'qud alaih occurs when the insured pays a premium in exchange for a promise of compensation arising from a particular event insured. Given this, scholars view insurance contract as a contract for the exchange of goods or services. However, Dr. Yusuf Al-Qaradawi does not think that the concept of insurance contradicts the teachings of Islam, but he found that some conventional insurance practices needed modification to bring them in line with Islamic teachings. The observation that the modern form of insurance companies and their current practices are not pleasing to Islam does not mean that Islam against the concept of insurance itself, not in the slightest. It just goes against the way and method. If other insurance practices are used that do not conflict with Islamic form of business transaction, Islam will welcome them.
As a conclusion, I will conclude all of the discussion above. Okay, Takaful, like insurance, can offer financial support while avoiding the banned features associated with insurance operations. Takaful is often referred to as ethical insurance. It is founded on the idea of mutual support and collaboration, and it promotes brotherhood and solidarity among the participants. From the perspective of Islam, several viewpoints on conventional insurance have been expressed. It is illegal according to the majority of Sharia scholars. The concept of conventional insurance is disapproved upon by religious scholars. Insurance contracts, they believe, contain aspects of gharar, that is uncertainty, maisir, that is gambling, and riba, that is usury, making them un-Islamic. Takaful thus offers an alternative to insurance for planning for life and unexpected events and uncertainties, as well as a unique opportunity to organize individual savings for the benefit of the Ummah, institute financial discipline, and encourage individuals to develop good financial planning habits. It will provide security to the individual, the family, the society, and the country.